Hello guys, long time no see. I think that has been more than 1 year since I last recorded in this channel, and I promised you guys that if there's really a devastating signal that is happening to the economy, I will share another video with you guys, and that is today. It's really important. It's once in a decade. Hopefully you can make the right decision. It's between failure and success. Hopefully you can make the right decision, and you can discuss it after this video. So I'll leave you timestamps in the comment section, and this is an unedited version, and it's pretty long, but I'll leave you timestamps, and I'll tell you what I'm going to go through in this video. Hopefully you can still give me a like and share. And the first thing I'll talk about the recent news of how ridiculous and foolish the market is. Keep on using the false signals, and so that the amateurs keep failing. They keep failing because they do not understand the true signals to in predicting the markets. So I will tell you the news today, and the second part is the true signal that I've been using for the past more than 1 decade, and how I taught 9,000 of my students how to predict the economy. The timing is really hard, but whether or not it's recession or not, right? That's really one important decision. Whether you should buy a house and hold it for 10 years, or when should you buy it, stuff like that. And the third part, I will share with you guys what had happened in the past year, because I think this powerful signal that I've been using have been pretty successful. 2 years ago, I've been saying that it's bull market. For sure, you can start investing and keep on investing, especially do not sell houses. If you can buy one more for investment. So what happened to the S&P is it was doing really good. What about right now? So right now, something bad is going to happen. I have 5 advices for you guys that is life-changing advices that I think it will impact me a lot if I didn't do it or follow it. And also, after 5 advices, I will share with you what the Fed should do, but I do not think it can save the economy anymore. And if you guys are interested in the last part, around 20 minutes, I'll share some personal updates to you guys, right? And recently, the news is like that. So the 10-year yield curve, the yield, is dropped below the 2-year yield. In other words, 10-year yield is minus 2-year yields as a negative effect. So what is happening? People have been panicking about this, and the stock market will crash, end of the world, stuff like that. So what is happening? So you can say I'll draw it like that. So the short-term yield curve is like that. The longer term or mid-term, usually we use 10-year, right? It's like that. So you can say that the short-term yield curve indicates the percentage or interest of the cost of making the product. Let's say the cost, okay. And then 10-year yield curve is the price of the product. Okay, that makes sense. Okay, so when the price of the product drops, below the cost of the product, what happened, right? Your profit margin becomes negative. And then in the real world, the bank stop borrowing money, and they will stop lending out money, and investor will have a hard time borrowing money for their businesses or their mortgages or the houses, stuff like that. So in what Janet Yellen said about this signal would not necessarily represent the recession. But I would say right now we have all the free data. We have Bloomberg, we have TradingView. They're all free. Just an amateur, he or she can do it at home and test the signal and do a statistic and do the back testing by only the eyes. Okay, so I'll show you what. So I'm amazed that people keep using the false signals to try to predict the market. Now, I understand that why people try to predict the markets, right? Because they do want to prepare for the impact. They want to have more options by time, right? But they use the wrong method, right? Because 10 is right, 2 is not right. I've been saying that it's always 10-year minus Fed rate, okay? You know Fed rate, right? Which the rate that Federal Reserve determined, for example, after so many years, after 1 year of this channel, after 8 years of my teaching career in Hong Kong, and also after 12 years, almost 12 years of my portfolio management, this is the first time I share, in between the time I share with you guys, that we are experiencing the interest rate cut again. The last time is 2007, okay? So this is really the key, and it's once in a decade, okay? So I'll tell you why I say that. So if you can plug in the numbers in that, you can plug in US 10Y, which is the 10-year yield, and minus Fed funds, which is the Federal Reserve funds, okay? This is the signal. So if you check that, you can place a red line at the 0, okay? So whenever this drops below 0, meaning that the price of the product is lower than the price of the cost, okay? So that is the signal. Now, you can click it to the monthly chart, and even for a pre-website like that, you can see up to 1989, okay? Which I was really young, really small, okay? So you can see all these dips here, all these dips, if I'm right, they are leading to recession. Now, you can look at comparison. You can put S&P 500, and then you can see two signals that I've been teaching all my students in Hong Kong, Canada, Australia. You can see that. The first signal is that every time you see 10-year yield, the 10-year yield drops below the Fed funds, okay, the recession must come, okay? The recession must come. At least the S&P must drop more than 40 to 50%. 40 to 50%. The second signal is that whenever you see that goes to negative, and you can see it's not instantly going to top out. It's not instantly going to peak. It will delay for few months to 2.5 years latest. And then the index will keep on hitting historic high again and again, okay? Again, two signals, okay? One, it refers to if we see this line goes to negative, recession must come, S&P must be peaked. The second signal is that the timing will be lagged. It won't happen right now, just like that. If you eat something unclean lobster, you put it in your mouth, okay? You're doomed to be vomiting, right? You throw up, okay? You have diarrhea. But it's not now. It will be 1 hour, 6 hours, 2 days later, depends on your health, right? That's exactly what's going to happen right now. So the signal is an unclean lobster. And what is unclean lobster? People keep guessing around. They try to find the prediction, okay? You can do statistics. This is the key, okay? Why not the other one, okay? US 10Y minus US 02Y. That's 10 minus 2 years. We can put this. Okay? It shows. Okay? Because statistically, whenever 10 years minus Fed funds becomes negative, it is almost for sure S&P will peak. Only except one time, it's 1995 here. 1995 here. Except this time. But if you use 10 years minus 2 years, it's not 100% of time. For example, this one, if you use this signal, you can see S&P eventually peaked, but you will miss the Asia financial crisis, which happened in 1997, which Hang Seng Index, the purple line, peaked right between 10 minus Fed, this one and this one. Right between this area, it peaked, okay? If you use 10 plus 2 years, it's accurate, it's not the most accurate. You understand? So, if I'm right, if you're right, if the data is right? We should always look for 10 years minus Fed funds first, okay? And then everything will become next, okay? If you eat the unclean lobster, you feel that your stomach is feeling uneasy, right? And then you will feel like you want to throw up or diarrhea. And then fever will come, etc., etc. So now, last year, there's another signal about 5 years minus 3 years. That's bull crap. That's bull crap, man. Because that doesn't even mean anything, okay? So you really have to do two things. One, you have to find something that is correlated to what you want to see, what you want to predict, right? You need to find a really high correlation with that, okay? The second thing, it needs to be a leading index, not a lagging index. So last year, we talked about 5 minus 3. That is not correlated with the economy, right? Now, today, you talk about 10 minus 2 years. That is correlated, but lag behind and not as accurate, okay? That's something that I do. You can use TradingView, you can use Bloomberg, you can do whatever research you can, okay? Because I'm pretty sure 10-year minus Fed funds is the key. It's the most accurate and the most accurate leading index to predict the S&P. And the S&P leads ahead of the economy, right? So people are trying to guess because the definition of economy is 2 quarters consecutively 2 quarters having a negative GDP, right? By that time, it's too late. So we try to find the non-farm payrolls, unemployment, GDP, right? That's all just coincident index. It's not leading, right? This is the leading index. You can take all the time you need, but that's happening right now. So last year when I started this channel, I told you that because I'll take out all the bullcrap and stay here. Last year, 2018, 2017, right? I believe it's 2017, okay? It's far from negative. At least there was some room for us to trade, invest, or at least hold our properties not to sell it, right? So you can see in the United States, it's doing pretty good. Australia and Canada, it went up a little bit and came down. In Malaysia, maybe especially in China and Hong Kong, it's historic high again. Okay, so if you listen to the program last year, you might you will have sold all the properties, all the houses you have, or the only house you have. So right now, what happened last year? Okay, you see S&P hit 1, 2, 3, 4 times historic high. Okay, not to mention that I started recording in 2017, right? It kept on going up, 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 up. At least you missed out. You missed out almost 30%. Almost 30% of the index growth, okay? And not to mention about, I always told you guys to invest in these stocks, right? And the housing market, of course, right? Amazon, it had hit $2,000, okay? Home Depot, 220. So this is our chance and this is our right to accumulate our wealth. This is our responsibility because this is a once a lifetime. Next time, how we use this? If next time the chance comes up again, before it goes down to negative, we should just do what happened in the past 8 or 9 years. If it's not negative, we keep holding our assets, general assets, houses, blue chips. That's really easy. No extra risk, okay? This is our chance and our responsibility to accumulate and to accumulate our wealth and to have some growth into our wealth, okay? So right now, what should we do? Right now, I will tell you guys, last 2 years ago, it's bull market, okay? Ever since March of 2019, this year, you see, this is the first time since 2007, this is the first time 10-year minus Fed is going into negative. It's March, okay? By that time, me and my whole team was preparing for the worst, okay, already. But we knew that if you eat something unclean, you don't have diarrhea right now. Okay, so we know that this is the last chance we buy stocks and the last chance for the housing market to shine. But that would be the last phase of the bull market. And the last phase would be really crazy, right? Because if you look at the S&P, because of the trade war, it dropped a lot, but then it rebounded significantly, like from 2,300 to almost 3,000, to exactly 3,000. Okay, so we prepare that. We have prepared this. We know we have to buy stocks, but we know down the road it will become recession. That's our last chance. After the recession, maybe 2 years, 4 years, and then the other bull cycle will come again. That by that time I will be 5 years older. Okay, I have to seize this opportunity. Okay, right now, if you would ask so the only question you should ask becomes, will the S&P, will the housing market, will the economy, will the stock index go up again, hit the record high again before going to recession, right? Now, that is a really hard question because you don't know, because the purpose of this method, 10-year minus Fed, has served its purpose, okay? It becomes negative. It makes a good running that 95 or 96% of the chance that recession is coming. Okay? And it will be delayed. It will give you 3 months, 4 months, or even 2 years time for you to prepare. But meanwhile, the stock markets, the housing market will still be really happy and excited. Right? So right now, it's 4 years already. In July, it's record high again. So what should we do right now? So I would say, if you are cautious, okay, if you're really cautious, you cannot take any risk, okay, you can live now. No matter that's a house, you have extra house, or your stocks, okay, you can sell it all. If you want to sell it all, but I do not think you should sell all your houses, because if you sell all your houses, you're nowhere to live, and you also have to pay the rent. Well, if this time it is delayed, the market is pretty strong, and now it lagged behind for 2 or 3 years, and then another 4 years of the recession, you won't be buying another house again, right? So you have total of 7 years of renting a house. It's not just the money that you pay. It's also your family, your frustration, the troubles. It comes that you're living in a place that you do not own, right? You have to keep moving. That is priceless, okay? So other than that, if you have second house, you have some cars, you have some stocks that you don't want to take extra risk, you can go. But you're taking the risk that it may, the index, the stock market, the markets will go up for another 6 months, 12 months, right? You'll miss that chance, okay? That's give and take, right? So for me, I would start selling something, okay, that I don't want to take risk, okay? But meanwhile, I will still be involved in the stock market until maybe probably it will hit another record high. But I will probably have stocks that that is only 20% or 30% of my portfolio. And other than that, I have few assets for you. First, reduce your stock weighting. Okay, but you have to really rely more on charting if you want to buy stocks, because you have to buy quick and sell it quick. You don't know if that's the peak, really the peak of S&P, right? The only time you know is that when S&P drops like hell, you say that, oh, it's peak. Yeah, humans' eyeballs are really slow and lag behind. Okay, if you try to use your eyes to catch a bullet, I guarantee you every time the bullet will hit your chest. Every time, okay? So this is the first strategy. The second advice I give you is, if you want to invest a lot more into the market, I suggest you to involve more in the ETFs or the futures of the FX, okay? Because you can have long positions and short positions, okay? If the S&P going down, you can buy inverse ETF. If the gold is going up, which gold really helped me a lot in the past year, I kept buying gold. But if the gold is going down, you can short, you can inverse ETF or short the futures, having short positions. If you think that's really difficult, you can buy stocks. The third one, the advice, if you still want to buy stocks, I suggest you buying stocks that their earnings will lag behind the economy, because those are consumer staples, okay, like Johnson & Johnson, Walmart, okay. Those are not necessary when the stock markets peaked out. We really don't yet know the impact. Our job is still there, and the first thing we cut is anything about gaming, traveling, those luxurious stuff, right? But not Johnson & Johnson and Walmart, right? So Amazon, Apple, they become consumer discretionary. You should not hold that too much right now, okay? The fourth advice I give you is the assets that will be left behind. For example, gold and oil. They usually lag behind the stock index. It will buy you 6 months or 3 months time to check more data or to see more of the S&P, how it's doing, and you have more evidence that, oh, S&P is doomed, and you can quit. Okay, the fifth advice, the last one. I'll ask you guys, ask also myself, to save as much money as possible. When the next bull market comes, we must invest. And then when this yield curve becomes healthy again, we do not have to spend our time speculating every single day. You can just buy and live it for 5 years, 7 years, 10 years. And that is the only stable and the most stable way to accumulate your wealth, other than just working our butts off and still not enough to pay the house, pay the rent, pay the management fees. That's what I've been doing since 2006, 2007. That's what took me from negative $800 in debt to now. I just had my book, right? To now $15 million as in assets. So that is what I wrote in my new book, my fifth book. That is my book launch was in July in Hong Kong Book Fair. I think it's a bit long, but if I were you, I think it is super helpful. But that is the only clip I really can't hold myself. I want to share with you guys, because I remember you guys always have been really supportive. Sometimes on and off, I miss you guys. That is really important thing that will ruin or make your family successful. It's only a choice. Only matter of one decision makes the whole difference. Do not start borrowing money, investing a lot in this market. Be really cautious, okay? That is exactly the opposite of what I said 2 years ago, because it is really the recession that is really coming. So now, the Fed, one thing, what should the Fed do, right? So if that's the key, that's why the Fed leads to cut rates, right? So now, if you are the Fed, you have this data, it's negative 0.7, right? So if for one interest rate cut is 25 basis point, now you have to cut 3 times, 75 basis point. So you have to know that now Donald Trump had done many things that is really crazy, I know. But one thing is true, is that the Fed should have cut the rate in March. And if that's last time in August the 1st, it should cut it 2 times, 50 basis point. But they didn't do that. They missed the chance. If this is right, then if this is right, and the speed of cutting interest rate is slower than the fact, the recession must come, right? So now the only thing is that the Fed should cut 75 basis point, but the world will panic if they are going to cut the interest rate for so much. So I really don't know what Jerome Powell should do right now. I think he should cut 50 basis point and kept on persuading the market that after this cut, I have no more intention in cutting the interest rate. And this cut will guarantee the economy will bounce back. then a slight chance 1995 will happen again. But somewhere along the world, for example, Hong Kong again, right? You know, the protests and stuff, it will go to recession a lot earlier than US. But that at least that's better than the whole world going to its recession, right? So that's really hard. This is the hard part. The hard part is in the front. The middle part is the easier part. That is the advice for you guys. Some updates for you guys. First of all, you can see I moved to a new office. I've doubled the space. The business is so far okay. And my fund is going to, I'm going to launch my fund now. Because of that, I've decided that next May, I'm going to move back to Toronto, Canada, if you know, right? With my kids. But I will still be working. I'll going back and forth from Asia, Malaysia to Canada. And when I live in Canada more, I may start classes in LA and New York first because I have classes in Toronto and Vancouver. In fact, the time I'm recording right now is I'm going to Malaysia next week, and 2 weeks later I'm going to Vancouver and Toronto. Even I'm not living there, I will go there once a year. But many of you guys, Chinese speaking, Mandarin speaking, or English speaking, there are many people wanting to join my class in US, but in the United States it's really scared, right? But the Chinese especially the Chinese and the population in Canada, they more or less like to live in Toronto, Markham, or in the Richmond in Vancouver, right? It's really close. So I try to do that. And the last, and also I have my third kid born. I think it's Christmas 2017. Not I think I know 2017 December, Christmas Day. That is girl. I'm done. 3 kids is enough. I'm really happy. So I know more about investing and the knowledge. Whether or not it's deep or not deep, it's easy or hard. It's just for your wealth, and your wealth is for your family and loved ones, right? And that's about it. That's my updates. Hopefully, I will see you next time, or maybe you can comment below any questions about that. If I'm free, I'll make you another video. Otherwise, I guarantee next time I know it's bull market that's going to come again, I'll for sure make a video. Or the S&P or the market really bounce back and hit historic high again, and then from the peak going down again, I may have another video. So now, that's basically the only thing I want from you guys is to leave a like and also share this video to others, to your friends. I know my language barrier and my English isn't really good, but I believe that investing is a global language. There's only one language in the investment world, okay? As my slogan said, investing made easy. I'll see you next time. Goodbye.